This stock just blew up after hours after releasing some great numbers on their earnings report. It's a stock that I see almost no one talk about on YouTube, and it's high growth, cheap, and just getting started in my personal opinion. That stock is Zuora, ticker ZUO. My name is Matthew, and today I want to cover the software stock that is powering the subscription economy. In this video, I want to explain my initial thoughts on this most recent quarter and doing my best to look at it as objectively and unbiased as possible, similar to my TTCF video that I did last week. And I'll try and explain why I think it's going up so much after hours. We'll also talk about the valuation just a little bit and potentially where the stock price could go next. Before we do that, transparency is absolutely key for anyone talking about stocks, in my opinion, online, on social media, wherever. So quick disclaimer, I do own shares of Zuora with 693 shares at $16.39 per share for my average cost basis. It takes up over 8% of my portfolio as of this time I'm recording, and as of now, it is the second largest holding just behind Celsius in this portfolio. And yes, this portfolio does represent the majority of my money invested in the stock market. My first video I ever made on this stock was about 5 months ago on the channel on March 7th, and if you had bought back then, you would have gotten it for an even better price than I did, now sitting up about 23% in the green. And including the after hours move, you're now well over 36% in gains. All right, let's get into the numbers. Zuora just reported their Q2 fiscal 2022 earnings, which is actually in the year of 2021. Some companies do that where their fiscal year is like a year ahead. So they were actually in line for non-GAAP EPS of -4 cents, but they missed GAAP EPS by 2 cents. So a slight miss on their profitability there, but they did beat revenue by 3 million, and their revenue was a 15.3% increase year over year. And right off the bat, the biggest deal that I see here is actually this revenue beat and the growth rate. And that's because one of the biggest bearish arguments for Zuora has been their slow growth. And the reason I think people are so critical specifically of Zuora on their revenue growth rate is because, again, they are meant to power the subscription economy, which is most things that require a subscription. Zuora is the one trying to power that system behind the scenes. And they created something, Zuora themselves created something called the Subscription Economy Index. And this is a graph of the sales growth of the Subscription Economy Index, or SEI, versus the sales growth of the S&P 500 Index and US retail. The point of this is so that you can see, hey, subscription businesses and the businesses you're supposed to be powering and partnering with, your industry that you're in is growing incredibly fast. And usually as an investor, you want the company that you're investing in to grow as fast or faster than the industry that they operate in. So yeah, you can see the incredible growth of their industry, but meanwhile, Zuora, as recently as Q3 of 2020, grew their total revenue by single digits, by 7.6%. And that is nothing compared to the incredible growth rate of their industry. And in this same quarter, Q3 of 2020, we can see that they actually grew subscription revenue by 15% year over year. And that's a bit more respectable, but still not where we want it to be. We really want it to be above 20%. And total revenue, again, grew by just 8% year over year. And for the remainder of this video, and for context, we as investors in Zuora primarily want to focus on subscription revenue growth because that is their main revenue segment. It makes up the majority of the revenue that the company brings in. Their other segment is professional services, which if you watch my first video, I'll explain why they're actually not really focusing on growth in that segment, and they're actually outsourcing more of that so that they can get better margins overall. But for the point of this part of the video is the focus is revenue growth, and it wasn't great. Now, in the following quarter, in Q4 of 2020, we see that Q4 right here, Zuora grew revenues by 12.6%. So now total revenue is in the double digits, we're getting closer, and subscription revenue, the one we want to focus on, is 19% growth year over year to 65.1 million for that quarter. Now, a lot of Zuora bears kind of blame management, saying that they were not able to deliver, they kind of keep over-promising and under-delivering, and they talk a big game about the subscription economy, and they almost use it as a buzzword. And to be quite honest, looking at the history of Zuora, I can kind of understand where they're coming from. Because in the next quarter, Q1 of 2021, we can see that Zuora's total revenue growth dropped again into the single digits after that great double-digit growth in the previous quarter. They're back now to 8.7% growth year over year. Subscription revenue was 65.1 million, an increase of 14% year over year, another decrease in revenue growth. However, as I was doing my due diligence into this company, I realized that they did have a multi-quarter plan and an almost entirely new suite of executives that could really take this company from an IPO to a $1 billion in sales company. Some investors had confidence in this new management, the long road ahead, and their new plan, and some kind of expected more of the same. And that brings us to this quarter. Again, we see subscription revenue growing 23% year over year. We're officially over 20% on the subscription revenue, which is amazing to see, getting closer and closer to the industry growth rate, which again is one of the biggest criticisms of this stock. And total revenue grew double digits, 15% year over year. And I think another important thing to point out is that over time, that total revenue growth rate will actually get better and better as we see subscription revenue take up more and more of that revenue composition. Because as subscription revenue grows faster and as it takes up a higher percentage of total revenue, the total revenue growth rate is going to be more highly correlated to subscription revenue and less weighed down by professional services. So taking a closer look here, revenue was 86.5 million for the company in this quarter, and specifically subscription revenue was 71.5 million of that 86.5 million. Now they did report a GAAP loss of about 23 million for this quarter and compared to a loss of 21.5 million a year ago, but their non-GAAP loss from operations is a bit better at negative 3.9 million, and that's when you're accounting for things like stock-based compensation. And this is where you have to point out the good and the bad of the quarter, at least from what I can tell so far, be more objective and unbiased as possible. Cash flow, they saw net cash used in operating activities for 2.6 million, which means that cash flow was negative 2.6 million because of the word used right here, compared to net cash provided by operating activities of 3.8 million a year ago. So their cash flow went from positive to negative. And free cash flow was also negative 4.4 million. And last quarter in Q1 of 2021, they had positive free cash flow. What might put us a bit more at ease with that, though, is that in Q1, in their conference call, they did mention that for Q2, which is the quarter that they just reported, we expect cash flow to be slightly negative due to the seasonality of Q1 billings and the employee stock purchase plan. So they did see this coming. Additionally, in their Q1 conference call, they said we continue to expect free cash flow positive for the full year, meaning by the end of this year, looking back overall, they should be free cash flow positive. Now we'll see if any of management's guidance has changed. I'm still awaiting their Q2 conference call transcript to come out. In fact, I'm recording this video so soon after they just reported that even if you go to their investor relations page, they have not yet posted their 10Q or their SEC filing, so I can look deeper into their financials. But when it does come out, I'll probably make a video here, so make sure to subscribe, or if I don't, I'll also probably make an exclusive video for the top tier members in investor community, so you can check that out, linked below. But what I do want to look for in their 10Q, if and when it does come out, is their margins. They're actively trying to stagnate and almost reduce revenue from professional services, like we said before, by outsourcing it to partners so that they can realize better margins overall. So that actually has been dragging total revenue down over the past few quarters, and it'll be interesting to see if their margins are continuing to improve as a result of this plan or not, as well as what's causing them trouble on the profitability side of things for this past quarter. Now we'll talk just a little bit about valuations here, and in my opinion, it's still trading relatively in line with its peers, and I would consider its peers Oracle and SAP. They're both ERP companies. Now Zuora is not yet profitable, as we just saw, so we can't really use the PE ratio here to compare them, but we can use their revenue as a way to compare the three companies. Right here, NTM TEV over REV just stands for the next 12 months total enterprise value over revenue. So over the next 12 months, what is their projected revenue, and we'll divide their total enterprise value by that amount of revenue, and this is the multiple that you get. You can see it's actually trading cheaper than Oracle and cheaper than SAP, but barely. And these are companies that have already matured greatly. They're already kind of slowed down in their growth and started to stagnate and plateau there. Whereas Zuora, in my opinion, they're really starting to get going with their revenue growth. And we as investors are being rewarded for being patient and sitting through a couple of rough quarters in terms of growth. And I think from here on out, things should get a lot better. For example, if we see Zuora continue to maintain a consistent 20% plus revenue growth for the subscription revenue segment over the next couple of years, we could definitely see some multiple expansion in my opinion. And finally, where do I think the stock could go next in the shorter term? Honestly, I have no freaking clue, but sometimes it is really fun to try and guess or make educated guesses with the help of a bit of technical analysis. And I know what a lot of you might be thinking. A lot of long-term investors write off technical analysis or they think it's voodoo or just kind of junk and not useful. But personally, I disagree. I have seen it work firsthand for myself and I guess secondhand for other members of investor community. And I think it's a really important tool that all investors or traders should have because as a long-term investor, even if you don't use it all that much, it can help you get an idea of what might be happening with the stock in the short term and potentially help you time better entries, dip buys, or even exits. I'm still a beginner with all this, so bear with me. But as we speak, we actually are having a live Zoom session with our mentor, Kevin D. He's been trading since the 90s. He does it for his full-time job, his main source of income. And he's doing a live lesson right now. So again, check that out in the pinned comment below. But let's dive into my terrible technical analysis. So I did remove some of the moving averages just so it would look a bit cleaner. But this chart represents a 5-year timeline of Zuora going back to, oh, just kidding. No, it doesn't. They went public in 2018. I don't know what I'm talking about. This is a chart of Zuora's price action since it IPO'd in 2018. So if we zoom in a bit here, this is 2019 over here, May, June 2019, there's a big drop in the stock price and it created a gap. So that's what this blue rectangle is. It'll come into play as we move closer and closer to today's date, which is over here. But if we zoom in just a little bit more for more context, we can see this is the March crash. This is the crash of February and March of 2020 caused by the Rona, of course, and this is the bottom of the market back in March 2020. So if we zoom in a little bit more, we can see it's been in a general uptrend since it bottomed out over there. Now, if we zoom in even further, these two arrows is right when I mentioned it for the first time on my channel in March, early March of 2021. And since then, it again has been in a general uptrend. And this right here is where we ended today. We closed at about 1634-ish. And after hours, however, it shot up about 14%. So it's roughly trading at 1850 since the last time I looked at it after hours. So this green line is meant to represent roughly where it's at after hours and hopefully where it opens tomorrow. And that's kind of important because if it opens up and continues higher, that means it would be making a new recent high. Its recent high was right here at about 1867. And if we can get through that, I mean, there is potential for us to close the gap here. That's why we have that blue rectangle and make our way closer to $20 per share. This would be a big gap up, so we'd be creating another gap in the stock price and the stock chart. But again, I'm a noob when it comes to technical analysis. I just think it's kind of interesting. Like maybe we could see it open and then continue to close the gap up towards 20, like 1970-ish. Maybe it'll open up, get rejected, come back down, fill the gap, and then go back up. So either way, and speaking on a longer term basis, as a long-term investor, the most important thing for me, for Zuora, is that it continues to deliver on these quarterly earnings so that we can continue this momentum. We need to continue to at least have quarters that are in line with expectations so we can keep this momentum moving forward. And of course, my focus right now is revenue for them. So yeah, Zuora has been a bit of a wild ride. It's been a bit stagnant. It's been really volatile here and there. And I'm just happy that we as shareholders get to see a good quarter. And hopefully the management's plan is falling into place. Now, I don't think we're out of the woods yet. We still need to see them get some consistency in their numbers from quarter to quarter. And that's another challenge that it seems for Zuora. And I will keep you up to date if there's any more news. So make sure to subscribe. If you found any value in this video, and I hope you did, please make sure to hit that like button. Again, subscribe and check out the quote of the day. You might just learn something. And yeah, follow me on Instagram at matthew.huo. Watch out for the scammers. And if you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.